my name's Vanessa Northam from StepChange Debt Charity, and I'm here to give you an update on what the charity has seen over the previous couple of months regarding COVID-19. There should be a slide pack accompanying this audio, and I will ensure that I reference which slide that I'm speaking about. So, slide 2, life before COVID-19. So as the UK's largest debt charity provider of free debt advice, we knew prior to COVID-19 that many people struggle with their finances. And as you can see, 7 to 10 people who came to us said that the primary reason they'd got into problem debt was because of a life event or shock. And I think it's fair to say that there's no bigger shock than COVID-19, as you'll start to see through the presentation. So a huge amount of people needing debt advice, estimates around over 3 million people in problem debt and should seek advice. Not all of them do. And as we consider the ramifications of COVID-19, the estimates range from an additional 3 million people needing debt advice up to 6 million, all the way up to 9 million people needing debt advice. So the debt advice sector is really going to need to ensure that it can cope with this an additional level of significant demand. Moving to slide 3. In terms of life before COVID, it was fair to say that debt levels were rising. We're seeing new issues such as persistent debt, which is basically where consumers are asked to increase their level of minimum payment that they're making towards their credit card debts, as many have found that they've only been making the minimum payment for years and years, and that those new guidelines came in from the FCA. A number of consumers were struggling to increase their minimum repayments, and those changes were due to land almost imminently as COVID lockdown landed. So there's still a huge amount of consumers that had financial worries and difficulty prior to COVID-19. If we move to slide 4, you can see there that Q1 in numbers, a significant amount of traffic to our website with over 2 million visits, a huge amount of money that we disperse through our debt management plans, and just a general picture that lots of consumers needed debt advice, just as the last 3 weeks of Q1 was very much COVID impacted. Moving to slide 5, it's fair to say that, like many organisations, StepChange had to act incredibly quickly to respond to the lockdown, and that involved us working very quickly to bring additional resources onto our website to help people understand and navigate what help and advice and support we could give them. As soon as lockdown was announced, we closed our phone lines for 48 hours, whilst we quickly got our colleagues to be able to work from home. We received 400 laptops via emergency funding from the Money and Pension Service to enable us to resume our telephone phone lines and get colleagues working from home. We worked very closely with our creditor partners to share with them insights and data that we were seeing from clients getting in touch with us. And then in April, we managed to recover the vast majority of our operational teams to be working from home. And we then started to look at what additional support would consumers be needing once they'd come through the end of their payment holidays. So working with organisations such as the FCA and the Treasury to help people who potentially need a bit longer than the standard sort of 3 months to get back on track, which we understand that banks would offer, but probably don't need full debt advice. And that work continues, and we're hoping to be launching that proposition in the coming weeks. And then since the beginning of this month, we're in almost like a steady state now, I would say. We have launched a digital referral form where, rather than transferring calls directly into StepChange, partners and creditors can arrange for a callback to be made, so at a time which suits their customer at a better time, but also to digitally refer, so to get a text message or an email in order to begin that online debt advice. Since the beginning of May, we've seen that volumes into the charity for debt advice have reduced somewhat since the initial panic. That's both for existing clients on debt management plans, but also new clients seeking debt advice. And we think that's very much as a result of limited or less outbound collections activity or inbound collections activity happening across multiple sectors, and therefore reducing the level of referrals to the charity. I'm going to skip over slide 6 because it's almost a bit of a repetition of what I've just said. On slide 7, you can see how we were able to resume and recover our position. And I'll talk more detail about the impact on disbursements and the number of clients that have been in touch to request a payment holiday or a pause in terms of their debt management plan. We've conducted several, obviously just over 16,000 reviews. As clients obviously have a change in circumstance, we make sure that we review and ensure the appropriateness of that debt solution, but also the affordability of that repayment plan. Moving on to slide 8. We saw a peak for clients requesting a pause in the monthly payment literally the week after, so Monday the 30th March, just over 1,200 clients got in touch to ask for a pause or reduced payment. That trend that you can see there on the graph has continued, and the latest figures on last Friday, I think the 15th of May, was that we had 16, so that's 16 requests for debt management plan to be paused or reduced payment. So it's safe to say now, as I say, we're in a more steady state of clients actually understand the impacts. So we're anticipating that we'll start to see a peak again as things like payment holidays, potentially for unsecured products, comes to an end. We're awaiting obviously an update from the Chancellor on that. But also that the ramifications of employer contributions to furlough come into effect most likely in August, where some organisations may find that they're unable to make those payments and therefore may have to lay off staff. On slide 9, one of the things that we monitor is our direct debits that returned unpaid, so where clients maybe have not got in touch with us directly but just cancelled at the bank. The latest figures for the 10th of May payment schedules, so we take direct debits on 2 stages, is that it's reduced back below the 10th of March figures. So I think that just shows that the vast majority of clients are in a situation where they can contact us and request that payment level. In terms of slide 10 and 11, as with all organisations, we're all looking at what the ONS data is showing us, the latest YouGov polling, to understand what is the likely long-term impacts. I think it's safe to say we all anticipate a potentially very severe recession. And you can see there some of the stats that we've been pulling together, but I'm sure like you're getting new sources of data on a daily basis. And we continue to obviously review and monitor and understand what that looks like. So if I now jump to slide 16, in terms of the demand for debt advice, so we're working closely with the Money and Pension Service. We knew that obviously provision for debt advice was going to go up regardless of COVID-19. As ongoing austerity, ongoing 0 hours contracts, potential downsides of Brexit, and so on. Not mentioned the Brexit word for some time, but COVID-19 has just blown all of these estimations out of the water. So we know that as StepChange, we was originally seeking to double the number of people that we help in by 2023. We revised that forecast now to doubling the amount of people that we help by in the next 12 months. So and obviously that's across multiple partners in the sectors. So slide 18 shows the number of ways that we've been increasing capacity. We have a full online debt advice journey, so clients don't need to necessarily speak to us, and we're seeing that the balance of between digital and debt advice is increasing all the time towards a full digital solution for which consumers are preferring to take. We have extended things like our referrals, as I mentioned earlier, and just continuously trying to drive efficiencies across the charity to help more and more people. Slide 19, this is where we are looking very much at the type of consumers and the type of consumers groups that we see coming out of the crisis, whether that's the first stage of lockdown or more broadly. But the time to recover is the group that we're thinking that are probably underserved at the moment as it stands. So, previously very financially healthy pre-crisis, but have been impacted by COVID-19, and their income levels are going to take some time to recover. So they might want to spread their repayments on both priorities and unsecured beyond sort of 3 to 6 months, but over a 12-month period. And as I say, those are the conversations that we've been working across the Treasury, UK Finance and the FCA. From a local authority perspective and a more broader sector-wide, we're keen to understand the forbearance approaches and the extensions that sectors can extend, because those will feed into our ability to advise consumers accordingly. If you have any questions, then please do drop me an email. My email is vanessa.northam@stepchange.org. Many thanks.